The number one mistake most supply and demand traders make is that they think every single zone is going to hold. When I first learned supply and demand, I thought I found the holy grail strategy. I thought I found the strategy that just does not fail. And I literally used to take every single zone no matter what it looked like. I used to take supply and demands thinking it is impossible for it to fail. I genuinely thought I was going to win every single trade because I thought every single zone would end up holding. I quickly realized that this is not supply and demand, and you actually need to have confluences and reasons to why you think any zone is going to hold. You need confluences to back up why you think that zone is going to hold, and you need confluences just to try and find the best of the best supply and demand setups. When you draw up a zone, you need a reason why you are drawing up that zone. Don't just draw it because that's the way you've been taught to draw it. Draw it because there is a legitimate reason to draw that zone up. You need a reason why you think any zone is going to hold. Reasons like gaps to fill. Is there a gap attached to the zone? Where's liquidity that needs to be swept? Are we already bullish or bearish? If we are super bullish, it makes sense to take demands, and if we are super bearish, it makes sense to take supplies. Let's say there are 5 demand zones. You need to refine and have confluences in order to choose and decide which is the best zone to take out of those 5. Most zones lose so other zones can win, and I'm going to be teaching you guys my exact confluences, the exact things that need to be there. And if these things aren't there, I do not classify that zone as valid. And if those things are there, I'm 100% taking the trade if we hit entry. Zones that are most likely going to hold are zones with higher time frame confluence, zones that follow 200 EMA, zones that are following trend, and ones that have a gap attached to it. You need to understand that pullbacks are necessary for the market to continue in the direction we want to continue in. All right, so let's look at some examples. Why and how come did this top zone lose, the second zone lose, and only the third zone won? First of all, there's no gap attached to this first zone. So this is already invalid for me. I would not even waste my time on this. There's no gap directly attached to it. This green wick right there filled the gap attached to the demand zone. The second zone did not give a break of candle entry, so it did not give my valid entry model that I need for every single zone to have it. Didn't break any candles to the upside, proving that we want to go in the opposite direction, that we want to continue bullish. If I had like a break of candle, like let's say we broke one of these candles here, the market's telling us and telling me that they could potentially want to switch bullish. It could be a fake out, but I would rather wait for a break of candle to give me extra confidence that they want to actually go in my direction. And now if we look at the third zone had everything. It had a gap attached to it. We are definitely in trend. There's been a lot of structure created before coming down into the zone. And as you can see, we did get a break of candle right here. We broke the lowest candle in the zone's high. So if this green candle breaks past this red candle here, I'm getting in at entry. I'm getting in at this zone because they've given me confidence and confidence that they could end up switching. From my entry model, I'm going to put my stop loss 1 pip below the lowest wick in the zone, and I am going to look for a 1 to 2 take profit. That is just how I enter. These are just confluences that need to be there in order for me to take a trade. Now we're going to go over a lot of examples to understand what I completely mean. Now let's look at this trade and break down why this trade ended up actually winning. So first of all, we have a major breaker structure. Like I said, this is part of one of my confluences. We broke this major high right up there. So that is a very nice breaker structure. That's what I need for my zone to actually be valid. I had a gap directly attached to my zone. On this example, we did not have 5-minute or higher time frame confluence, so this was just a regular 1-minute demand. Here you can see that we are above the 200 EMA, confirming that we are in trend, that we are bullish. You can see that price is constantly above the 200 EMA, meaning we are bullish for the day. We are bullish. I'm looking for buys because we are above the 200 EMA. Then the next thing, we had a very nice reaction at the zone. We had a pullback, a very nice pullback that the market needed to continue in its actual direction. And I'm going to show you guys the one thing that gave me the most amount of confidence in this trade and why I would end up getting hit is because if we go to the 15-minute, we left behind an open gap. So when the market opened, look at this big gap we left behind. Like I said, we are targeting liquidity and gaps. that is giving us extra reasons why zones could hold, because we need to target and fill in gaps in liquidity. And here was a perfect example of this. We had this huge open gap that needed to be filled, and on the 1 minute, half of that ended up getting filled. So it just completely makes sense to take this demand in this case and filter out all the bad demands. You can see that this 1 minute demand pushed up and filled like a quarter of this gap, and the market is still eventually going to fill the rest of this gap. We just don't know when. And if you look at it, we had liquidity sitting up top here. We had people's stop losses sitting up top here, and the market ran all the way to that liquidity and filled in some of the gap. Another thing that makes this trade completely valid and why I like that is because we got break of candle entry. Following my rules, my stop loss would be 1 pip below the lowest wick in the zone. So 2.1 pips from break of candle would have just been at 3.1 right underneath the zone, and we hopped in at break of candle. Seeing this break of candle right over there is indicating to us that the market wants to push up. They're breaking previous candles, showing that the market actually wants to push up, actually wants to go in the direction I want it to go to. Here is another example of an amazing trade that I took. We have a 1 minute supply right over here. We are following the 200 EMA. You can see that we switched bearish and we are below the 200 EMA now. You can see that we had a very nice breakout structure. We had a pullback to come back into our supply. No other supply, there was no other supplies, so ours was the highest supply that ended up getting a pullback into. And if we go to the 15 minute, we had more 15 minute confidence. We were coming from this other open gap right over here, and the market filled in half of that and continued on dropping. We had liquidity down here that the market needed to come and sweep. So this trade was literally screaming it's going to hold when it comes back into this. And as you can see, there was no other supplies that we could have come into. Like there was one up top here, but the EMA is not aligning with the one up top. So I'm going to be taking the second one down here because the EMA is lining up with it. It's showing that we are switching trend finally. Another reason why I like this supply is because look at the reaction from the zone. No candles closed in the zone. We got an instant rejection from the zone. We had a break of candle entry. You can see, let's hit replay. You can see at this point our entry would be at break of this candle, showing that the market wants to continue in our direction, and the market gave us this. The market broke past this candle, indicating that we want to push down now, or it could be a fake out and just continue back up. But you can see that the market followed through with what it indicated, and it pushed all the way down. And this kept going, like I said, all the way down to this liquidity down here where the market wanted to go to. It needed to fill in this liquidity. It took a bit of time, but it ended up getting there, and you could have held and capitalized on this whole move down. I hope you did learn something in this video, and that you should be focusing on taking the best of the best and not trying to take every single zone, because not every single zone is going to hold. If you want to trade with me and learn with me, you can join my community. The link is in the description. And that's all I got in this video. Make sure you guys keep grinding, keep getting to the next level, and I'm going to see you guys in the next video.